Tax loophole is two buzzwords that are used all over the media most of the time from people who don't have a single clue of what they're actually talking about. So today, me, a tax specialist, will come in and help you actually understand what these are and why they don't really exist in practice. Now, there are legal tax strategies that exist that can lower your tax bill that rich people utilize all of the time to pay almost nothing in taxes. However, they are not loopholes or tricks that they are doing to abuse the system. And if you understand the system, you can do all of these too. I promise you, in this video, I'll break down the difference between a tax loophole and a tax strategy, give you examples of each, and make it very, very clear to you how you can do this in your own lives. If you guys don't know me, my name is Aaron Shplosky. I'm building a tax strategy firm for young sales reps, and I've been studying the tax law for years now and investments with it. I studied economics at UC Davis, and pretty much everything since I was 17 has been about finance or football. So yes, I would consider myself actually qualified to speak on this topic. Now, I do want to make something clear that I previously stated. There are rich people who don't pay any taxes, and they might cash in $2 million, $3 million, $4 million per year and literally pay almost nothing on it. Now, you might be thinking, this is crazy, they need to pay their fair share, and I totally understand that argument, but what you have to understand is that the IRS and the government are actually a fan of this. And crazy enough, if you actually understood what was going on, you would agree with them. And let me explain why. See, the IRS is a rule book of incentives. They give people tax breaks for things that they want people to do. And so I want to give you guys a couple examples of this. So our country needs oil and gas. If you think that we should have clean energy for everything, that's totally fine, but it's impractical and not possible in today's age. So if you want gas in your car, or if you want to be able to drive places, we need oil and gas. And the reality is, if we're dependent on the Middle East, we are one war or political disagreement away from our country not being able to have gas. And if you're a snowflake that thinks that we need to have electric cars for everything, that's fine, but it's not realistic. We feasibly cannot do that. And so for a long time now, there have been a lot of IRS benefits to investing into oil and gas. Now, once again, you can do this too. I think you have to have a minimum of $200,000 of income to start investing into most oil and gas deals, but it is accessible to the average person. You just have to make some money first. So if you make 500 grand in a year, you could put in 200 grand and then get like $180,000 in a tax write-off, which just like that, cut your taxable income by 40%. Now, obviously, you don't get access to that money, but that's just one example. Now, you might be thinking, okay, that's normal, like that's just an investment. I still don't get to keep that money. That doesn't really sound like a loophole or a strategy. Let me dive in and I'm gonna show you real examples of each of these clear and concrete so you can get an understanding of where these IRS rules come from. And I promise you, there is almost nothing in the tax code that doesn't have a concrete why to it. It almost always will have a reason that actually makes sense when you think about it. Now, I'm not saying I like the IRS or I think that everything that they do is right. Obviously, getting into tax, trying to save people money on tax, I think that a lot of what they do is corrupt. But I will say that the tax code is actually mostly defined for people to become entrepreneurs and investors, which grow our society and make it better. So before I dive into the legal strategies and things like that, I want to give you an example of what a tax loophole actually is. Now, I define a tax loophole as a legal break in the system, something that it was not the way that the IRS intended it to be, and it is something that is just against the rules. Somebody bent the rules and interpreted something some way that gives them a little cheat. Now, I want to make something very clear to you about the IRS. See, the IRS in court has proven time and time again that there is a rule that says substance over form. And what that means is that the substance of what you're doing has to actually be aligned in a way that makes sense. Meaning you can't just do something for the tax benefit. So you might have heard of different trust structures or family foundations or things like that. And the reality is, if you start those things, because those things might give you real tax benefits, and the IRS looks at that and says, you only did that because of the tax benefits in it, they will disallow the deduction and make you pay taxes on it, even if it was a completely legal strategy, which in my opinion is complete BS, but that is how tax court works. And on top of that, if there is a hole in the system, almost every single time within 3 to 5 years, the IRS will figure out about it and then they will go in and disallow it. This is happening right now a lot with captive insurance companies. Basically, people will start their own insurance companies and take a deduction for parking money in there and then they don't have to pay taxes on it. But then they can only use the money for like insuring themselves, which can be legitimate, but the reality is that most of the time it's not. And if the IRS looks at that and says you only did that because you wanted the tax deduction, they will disallow it. Doesn't matter how legitimate you thought it was. So here's a great example of a tax loophole. Apple in the early 2000s obviously didn't want to pay taxes, as most corporations don't. So they figured out that in the US, the rule is if you're a US-based corporation, you get taxed on your income no matter where you made it in the world. However, there was a certain foreign country that had the rule that said it doesn't matter where your corporation is based, you only get taxed on the money that you make in our foreign country. So you might be getting a sense of where the gap is here. What Apple did was they based their business in the foreign country, and then they ran operations in the US and made all their money in the US, but it wasn't a US-based company. And so because they were a company in the other state, and that other state was saying, hey, you only get taxed on money you make here, and the US was saying you only get taxed if you're an income-generating corporation here, they weren't getting taxed in that country or the US. And so they basically paid nothing. Now, this was a loophole. This was a flaw in the system, 100%, and it's been closed now. But actually, this was a huge debate, and they got into IRS law where they were saying that they had to go back and pay all that money. However, for like 10 years, this went on and was a completely legitimate strategy at the time, but it got blown up in court. That's an example of a loophole, and it got blown up in court. So believe me when I say these loopholes get closed, Apple couldn't get around it. So you still might be hearing, okay, but the rich people aren't paying any taxes. How do they get around this? From what I've studied, there are pretty much 3 ways that you can get around taxes. One is deferring the money to a later time, which is completely legitimate. That's like your typical 401k. However, that's not like the main thing that people do. The 2 main things that people do is they depreciate their investments, and 2, they give away the money to charity. Now, let me give you some examples. The main thing everybody knows about is real estate. So this goes into like why Donald Trump didn't pay any taxes. See, when you buy a real estate property, you are able to deduct the full cost of the building. So if you buy a $1 million property, you're likely going to be able to write up close to $1 million. Now, you might be thinking, okay, that's great, but you still have to put the money into that property. You're correct. So it doesn't seem like that great of a tax benefit. But the reality is that when you invest in that property, you're likely only putting $200,000 down. So essentially what's going to happen is you're going to get a $200,000 input of cash, but you're going to get out a $800,000, $900,000 tax deduction. Now you have to spread that out over time, and there's a bunch of rules with things like that, but that's in essence what's going on. And because you have renters, you have other people that are paying down that mortgage and that loan for you. So I'm gonna tell you straight up, that is about 80% of the way that rich people get around taxes is they just use a ton of debt in real estate. And it creates these huge deductions that just make it go against all of their income. And when you think about this on a really small scale, it's actually not that hard to execute. Now, there is a lot of rules about what type of income can go against what, and I have separate videos on that you can watch. But in essence, what you could have happen is you could make $300,000 in a year, put $200,000 into a rental property, and then you would get a $300,000 deduction most likely, and boom, you pay no taxes. It's not that simple. There's so much that goes into that, and you have to factor in rules such as cost segregation, bonus depreciation, and being a real estate professional or not, but that's how that can work. Now, you might look at this and say that's unfair because poor people, people making under that amount, or people maybe that live in different areas that are more expensive, they can't afford to invest in real estate, so they don't get that tax benefit and they still have to pay taxes. And you're 100% right, but the reality is that the IRS says you're providing housing to people. We don't want homeless people, so we're going to give you a benefit for that. And I'm not doing the whole thing where it's like, you know, you should be thankful for billionaires or you should be happy that your landlord gives you a place to stay. But in reality, that's basically the truth. Because if we didn't give these tax benefits to people, there wouldn't be a whole lot of a reason to go out and build properties. Yes, of course, they'd get an investment and things like that, but actually what's going on here is the IRS is making it so the rent is a lot cheaper for people. Because guess what? If real estate investors had to pay all of those taxes back, what they would do is they would just pass that cost onto the consumer. This is the same thing that happens when people think we should tax corporations more. When corporations get taxed more, keep in mind, everybody's getting taxed. All of the corporations are the same, which means they all react the same, which means everybody increases their prices. You're not just going in and increasing taxes on one corporation. So whether you like it or not, this rule 100% should exist. And if you think your solution is, well, the government should build housing, one, the government sucks at doing things themselves, so that's a terrible idea. But more importantly than that, where would they get the money to do it? Well, they would have to raise the tax money to go build it. So guess what? People would have to get taxed more to get worse housing, and people wouldn't have the opportunities to invest in things like this. It's a complete killer for wealth growth and American innovation. And time again, this has been proven. And there are so many other tax strategies that exist, and most of the time it's around using debt. And a lot of times too, it's around giving money away. It's about putting your kids on payroll. Like, that's not a loophole. The IRS knows exactly what they're doing when they say you can get a tax deduction for hiring your kids. Why is that a good thing? Well, guess what? You are making businesses stronger by making America's youth work, and you're giving them an opportunity to take over the family business later. And if you are the American government, you want businesses to be strong, because strong businesses means innovation. It means people are employed. It means people are not homeless and on the streets. And you can be all socialist, whatever you want, but the reality is that when you look at capitalism, the states that have the most flourishing capitalism are the ones that are actually doing the best. So like, for example, Utah and Arizona and Austin, Texas, all have tons of businesses flooding there right now, and those cities are flourishing, versus businesses are running away from the most socialist cities, San Francisco, LA, Chicago, places like that. And those places are riddled with homeless, they're riddled with crime, they're broken, there's so much trash on the streets, they look terrible. But Utah is clean as hell. And the reason why is because those states invite businesses. And so I know it seems unfair, and people aspire to have a society where the people who make the most get taxed the most, the people who make the least get taxed the least. But the reality is that's actually backwards in thought. Because if you are leading a country and you want your country to be strong, like, step away from yourself for a second, wouldn't you want to incentivize people to innovate and to build and to take risks that are going to make society better? So for example, if we want to compete with other countries, we want to be the first person to have AI, or the first country to have AI, the first country to have the iPhone, things like that. And the reality is it's going to take a lot of people trying to get the iPhone made to make the iPhone. It's not like if we had one person trying mediocrely to do it, it would happen. No, it was 10,000 people all trying to come up with this, and the one person who had the best idea, the best execution, makes a ton of money. Interestingly, we don't want to just go rob that person, because what that does when we go and take a bunch of money away from the successful entrepreneurs and investors, what we're saying is that if you win, you're going to be punished. And that is de-incentivizing people to win. In actuality, you want to be doing the opposite. Now, I'm not recommending that we put like a huge tax hike on poor people. I don't think that that's the solution. But I do think that the reality is we don't want to close these strategies that allow rich people to not pay taxes. Because what the government is saying is, okay, if you want to go buy a Lambo, you want to go buy a yacht, you want to go buy a watch, you're going to have to pay taxes on all that. You don't get to deduct all that. However, if you build housing for people to live in, if you go out and start businesses that people can use and employ people, you are going to get the tax benefits. And so I encourage you, when you're thinking about taxes, when you're thinking about investing, when you're thinking about society and what we want, you should want to center these things to incentivize people to do things that you want them to do, if you were a politician or the head of the IRS or whatever. So for example, I have a thought on how I view taxes, and I always think that you should do things to incentivize people. So here's an example. I believe that we should have an incentive structure that says if you build single family homes and sell them to retail investors, so you sell them to, like, the average, Joe and Jane who are just buying a house and want to have 2 kids, okay? You should get a tax benefit for that, whether you don't pay capital gains tax or you get accelerated depreciation when you're building or other things like that. That would incentivize a lot of people to go build single family homes. So people think the solution is banning institutional investors and like private equity from buying single family homes. Really, they're not doing that on the scale that you think that they are, because single family homes are not a good investment right now. And because they're not a good investment, nobody's building. And so what you need to do is make single family homes a better investment so people start building them. And that way, when people start building the single family homes, what will happen now is there will be more supply, which will stabilize the price. I really encourage you all, if you watch this, think of the economy in supply and demand, and think about the incentives that you are putting on investors. And instead of looking, how do we tax the rich more? How do we take away from the rich? How do we take away from successful people? Look to try to become them. And yeah, you could say they start with advantages. It doesn't matter. Who cares? Everybody in this country can get to a point where they build wealth, and it's because of our tax and economic structure. Thanks guys for watching. If you're a sales rep making over 150K a year and you want to learn how to utilize some of these tax strategies, click the link in my bio and I can get on a meeting with you today and instantly help you out if you are a good fit. Otherwise, comment below what you think and make sure to subscribe.